Hello students, in present video I am going to explain about third problem from bills of exchange topic. I am taking this question from Pankaj publications book. See the question. On 1st January 2015, Mahesh sold goods worth 5,000 rupees to Pradeep. On the same date, Mahesh purchased goods worth 8,000 rupees from Dinesh. Mahesh drew a bill on Pradeep for the amount due payable after 4 months. Mahesh paid 3,000 rupees to Dinesh and endorsed Pradeep's acceptance to him. Dinesh discounted the bill with his bankers for 4,850. On the due date, the bill is honored. Past journal entries in the books of Mahesh, Dinesh and Pradeep. This is the question. For easy understanding, I have written the question in this manner. See, on 1st January 2015, Mahesh sold goods to Pradeep for 5,000 rupees on credit. Mahesh prepared a bill for 5,000 rupees. Mahesh presented this bill to Pradeep. Pradeep accepted this bill. Pradeep returned this bill to Mahesh. Bill term is 4 months. So from 1st January to 4 months if you count, 1st January to 1st February 1 month, 1st March, 1st April, 1st May. Month is falling in May. And this is bills of exchange, Therefore, 3 extra days we have to add, known as grace days. From 2nd, we have to count 2nd, 3rd, 4th. So, 4th May 2015 is the due date. On that day, Pradeep has to pay 5,000 rupees to Mahesh. On the same day, 1st January 2015, Mahesh purchased goods from Dinesh for 8,000 rupees on credit. So, here, think from Mahesh point of view. To Mahesh, Pradeep is a debtor because from Pradeep in future 5,000 should come, and Dinesh is a creditor because to Dinesh in future Mahesh has to pay 8,000 rupees. Now what Mahesh did, instead of waiting till 4th May, Mahesh endorsed this bill to Dinesh. So when Mahesh is transferring that bill to Dinesh, date is not mentioned in the question. Our assumption is everything is happened on 1st January only. So on 1st January, Mahesh transferred this 5,000 worth bill to Dinesh. That is known as endorsement. So here Mahesh is endorsing the bill now. He is known as endorser and Dinesh is known as endorsee. And Mahesh and Pradeep, if you see here, Mahesh prepared a bill and Pradeep has given acceptance on that bill. Therefore, for this bill, Mahesh is a drawer and Pradeep is drawee. Mahesh has to pay 8,000 rupees to Dinesh now. Mahesh endorsed 5,000 worth bill to Dinesh. More how much he has to pay? 8,000 minus 5,000, 3,000. That 3,000 Mahesh paid to Dinesh in cash form. What Dinesh did? Instead of waiting till 4th May, Dinesh sold this bill to his banker. That is known as discounting the bill. So in question he is giving that bill is discounted for 4,850. What is the meaning of that? Bank is deducting 150 rupees in the form of discount. Remaining amount 4,850 is deposited by the banker in Dinesh account. On the due date what happened? Bill is with the banker now. Bank went to Pradeep. And Pradeep honored the bill. Means Pradeep paid this 5,000 rupees to bank. So this is the question. Now in Mahesh books, in Dinesh books and Pradeep books, we have to write journal entries. Journal of Mahesh. Mahesh is drawing now. Now while writing these journal entries, you have to analyze from Mahesh point of view. Journal format is date, particulars, ledger, folio number, debit, credit. Mahesh on 1st January 2015, he sold goods to Pradeep for 5,000 rupees on credit. For this credit sale, first entry we should write. Next, on the same day, on Pradeep, Mahesh prepared 5,000 worth bill and he received acceptance from Pradeep. For receiving acceptance, second entry we should write. Third, on the same date, Mahesh purchased goods from Dinesh for 8,000 rupees. For this purchases, third entry. Next, on the same day, as a settlement, Mahesh is giving 3,000 rupees cash to Dinesh and Mahesh is endorsing 5,000 worth bill to Dinesh. This is the last transaction. Next what happened? Dinesh discounted that bill with the bank. So this discount transaction is between Dinesh and the bank. Mahesh is not affected. Therefore, for this discount in Mahesh books, we need not to write the journal entry. Next, on the due date, bank went to Pradeep, bank presented the bill and took the money. So this is between banker and Pradeep. Mahesh is not affected. Therefore, for honor of the bill also, in Mahesh books, we need not to write the journal entry. Now, firm owner is Mahesh. Think from firm's point of view, nothing but Mahesh point of view. Mahesh sold goods to Pradeep. So, from Mahesh, goods are going. This is credit sale, no? Therefore, from Pradeep, cash is not coming. Two accounts are Pradeep account, goods account. Pradeep account is a personal account. Goods account, goods means asset, no? Assets come under real account. Now, apply this double entry rules. Personal account rule, debit the receiver, credit the giver. Real account rule, debit what comes in, credit what goes out. Nominal account rule, debit all expenses and losses, credit all incomes and gains. Personal account rule, debit the receiver, credit the giver. Pradeep is receiver, no? He is receiving goods. Therefore, we have to debit Pradeep account. Real account rule, debit what comes in, credit what goes out. Goods are going. Therefore, we have to credit. When goods word come in credit, instead of the transaction name we should write. This is sales transaction, no? Write down sales. Final entry is Pradeep account debtor to sales account 5,000. Date 1st January 15. Narration, being goods are sold on credit. Next, on the same day, Mahesh need a written proof for this 5,000 rupees. Therefore, Mahesh prepared a bill on Pradeep and Mahesh received acceptance on that. Then what is the entry for that receiving acceptance? See, what is the end result of this first entry? Pradeep personal account is debited, no? When any personal account is debited, it gives a meaning that that person is a debtor. Debtor means asset. In Mahesh balance sheet, as a debtor, this 5,000 is appearing. Now what happened? Mahesh prepared a bill on Pradeep and he received acceptance on that. So this debtor asset is converted into another form, that is bills receivable asset. This debtor account we have to cancel. In that place, a new asset known as bills receivable we have to create. How to cancel debtor account? Once you see this entry, how we created this debtor account? By debiting. If you want to cancel, you have to credit. Therefore, Pradeep account we have to credit. Next, a new asset known as bills receivable now we want to create. Asset shows a debit balance. Therefore, if you want to create any asset, you have to debit that asset name. If you want to cancel any asset, you have to credit that asset name. We want to create bills receivable account now. Therefore, we have to debit bills receivable account. Then the final entry for receiving acceptance is bills receivable account debtor to Pradeep account 5,000 on the same day. Narration, being acceptance received. What is the result of this second entry? In the place of debtor, now a new asset is created, bills receivable. Next, what happened? Mahesh purchased goods from Dinesh. So from Dinesh, goods are coming to Mahesh. Two accounts are goods account, Dinesh account. Goods account is a real account, Dinesh account is a personal account. Now, real account rule, debit what comes in, credit what goes out. Goods are coming, we have to debit. Personal account rule, debit the receiver, credit the giver. Dinesh is giving goods, he is a giver, credit. Instead of goods word, transaction name. This is purchase transaction now. So what is the entry for purchasing goods from Dinesh? Purchases account debtor to Dinesh account. He purchased goods for 8,000 no? On the same day, 1st January. Narration, being goods are purchased on credit. Now, Mahesh has to pay 8,000 rupees to Dinesh. No? So what is the result of this entry? See, Dinesh account is credited in Mahesh books. If any personal account is credited, meaning is that is a liability known as creditor. Now in Mahesh balance sheet under liability side as a creditor, this 8,000 is appearing. Now Mahesh wants to clear this loan. How he cleared that? With Mahesh 3,000 rupee cash is there. So that cash he paid and this bills receivable asset is there, no? That also he has given to Dinesh. So when he gives cash, asset, cash will get cancelled. Similarly, when he endorses this bill also will get cancelled. Therefore, bills receivable, cash, these two now we have to cancel. How to cancel them? How we created bills receivable account? See the second entry, by debiting. This asset now we want to cancel. Therefore, we have to credit bills receivable account. And cash is also credited because cash is a real account, no? Real account rule, debit what comes in, credit what goes out. From Mahesh, cash is going. Therefore, we have to credit cash account. 3,000 cash is going, 5,000 worth bill is endorsed. So, in credit column, these two amounts. 3,000 plus 5,000 we have given to Dinesh. So, Dinesh is not a creditor now. Means this liability, creditor, we have to cancel now. How we created this liability? By crediting Dinesh account. If you want to cancel this liability, again you have to debit Dinesh account. So this is a final entry for this settlement. Dinesh account debtor, 2 cash account, 2 bills receivable account. We have created Dinesh liability with 8,000. Now, as we are settling fully, this liability fully we have to cancel. Therefore, for Dinesh, in debit column also 8,000. Narration, being bill is endorsed and cash is paid for the balance. Balance amount is 3,000 now. For that, he is giving cash also. With this, Mahesh journal is completed. Next come to Dinesh journal. Journal of Dinesh. Who is Dinesh? Endorsee. Now think all the transactions from Dinesh point of view. Our assumption is firm owner is Dinesh. First, what happened? Dinesh sold goods to Mahesh. So from Dinesh, goods are going to Mahesh. Two accounts are Mahesh account and goods account. So Mahesh account is a personal account, goods account is a real account. Personal account rule, debit the receiver, credit the giver. Mahesh is receiving goods now, he is a receiver, debit. Real account rule, debit what comes in, credit what goes out. Goods are going, therefore credit. When goods word comes in credit, instead of that transaction name we should write that is sales. So entry is Mahesh account debtor to sales account, being goods are sold on credit. 8,000 on 1st January. Next, what happened? From Mahesh, cash 3,000, endorsement 5,000 worth bill is coming. For that, we have to write the second entry. Cash is coming to us. So cash account is a real account. Real account rule, debit what comes in, credit what goes out. As cash is coming, debit cash account with 3,000 rupees. See, what is the result of this first entry? Mahesh account, personal account is debited. Means there is one debtor asset, no? So the result of this first entry is under asset side, debtors 8,000 is appearing. Now what happened? From Mahesh, 3,000 cash and 5,000 worth bill is coming. When these two amounts are coming, now Dinesh is not a debtor to us because already he is clearing his liability. Therefore, debtor we have to cancel. In that place, how much cash is coming to us? 3,000 rupees. That asset is created. How much worth the bill came to us? 5,000. To Dinesh also, this bill is bills receivable because in future he will receive money on that. So, debtor asset is converted into two assets. Cash 3,000, bills receivable 5,000. Therefore, debtor account we have to cancel. Two new assets, cash and bills receivable, we have to create. So what is the entry for that? Asset, if you want to create, you have to debit, no? That is why cash account is debited. Even bills receivable account also with 3,000 and 5,000. And by debiting, we have created this Mahesh account. If you want to cancel, you have to credit Mahesh. So this is the entry for settlement. We have created Mahesh account with 8,000. Therefore, now we are cancelling this Mahesh account with the same amount. Narration, being endorsement is received and a received cash for the balance. Balance is 3,000 now. Next, what happened? Instead of waiting till the due date, Dinesh sold this bill to his bank. He discounted the bill. Now for this discounting in Dinesh books, we have to write the entry. So with Dinesh, 5,000 worth bill is there. He sold this bill to bank. Means now this bills receivable is not there. What bank people did? They have deposited 4,850 in Dinesh bank account. Therefore, Dinesh bank balance, cash at bank, is increased by 4,850. So bills receivable asset is converted into cash at bank asset. Bills receivable asset we have to cancel and the bank balance we have to create. So bank account debtor to create a bank balance asset. Otherwise, bank account is a personal account, no? Personal account rule. Debit the receiver, credit the giver. Banker is receiving 4,850. That is why bank account is debited. In two ways we can understand this, why bank account is debited. Bills receivable account. Here, by debiting we have created this asset account. When this bill is sold to bank, now this asset will get cancelled now. How to cancel this? By crediting. We have created bills receivable with 5,000, therefore we are cancelling with the same amount. Now 5,000 worth of bill we are cancelling, but our bank balance is increased by 4,850 only. So the difference 150 is what? Loss to Dinesh. So instead of receiving 5,000 rupee, Dinesh is receiving only 4,850. So this 150 is known as discount allowed. So discount allowed loss comes under nominal account. Nominal account rule, debit all expenses and losses, credit all incomes and gains. Therefore, discount account is debited on the same day, 1st January. So this is the entry for discounting the bill. Narration, being bill is discounted. Next, what happened? On the due date, bank went to Pradeep. Bank presented the bill and Pradeep honored the bill. Transaction is between bank and Pradeep. So Dinesh is not affected, no? Therefore, for this honor in Dinesh books, we need not write any entry. So journal of Dinesh is also completed. Next come to journal of Pradeep. Journal of Pradeep, drawing, date, particulars, LF number, debit, credit. Now you have to analyze from Pradeep point of view. Because in Pradeep books we are writing, no? Our assumption is firm owner is Pradeep. Think from Pradeep point of view. First, what happened? Pradeep purchased goods from Mahesh on 1st January 2015 for 5,000 rupees. Second, what happened? Mahesh prepared a bill. He presented that bill to Pradeep. Pradeep accepted that bill. So second transaction is acceptance given to Mahesh. Next, what happened? Mahesh endorsed this bill to Dinesh. So this endorsement is between Mahesh and Dinesh. Pradeep is not affected, so no need to write any entry for endorsement. Next, what happened? Dinesh discounted the bill to bank. This is also between Dinesh and bank. Pradeep is not affected, no need to write any entry for this discount. Next, on the due date, bank came to us, we honored the bill. We are only honoring, means we are affected. Therefore, for honor, Pradeep has to write the entry. So three transactions. First one is purchasing goods from Mahesh on credit. Second one, giving acceptance on a bill. Third one, honor of the bill. For these three transactions, three entries we have to write now. Pradeep, firm, purchased goods from Mahesh on credit. So from Mahesh, goods are coming. Two accounts are goods account, Mahesh account. Real account, personal account. Real account rule, debit what comes in, credit what goes out. Goods are coming now, debit. Personal account rule, debit the receiver, credit the giver. Mahesh is giving goods, he is a giver, credit. Instead of goods word, transaction name, purchases. So first entry is purchases account to Mahesh account. Date 1st January, 5,000. Narration, being goods are purchased on credit. Next, what happened? On the same day, for this amount, Mahesh has written one bill. We are giving acceptance on that bill. For that, we have to write the entry. See the effect of this first entry. Mahesh account is created. Personal account is created. Means he becomes a creditor, no? So in Pradeep balance sheet, liability side, creditor 5,000 is appearing. Next, what happened? We have given acceptance on a bill to him. So this creditor liability is converted into another liability known as bills payable. Therefore, this creditor we have to cancel, a new liability bills payable we have to create. How we created this creditor liability? By crediting Mahesh. How to cancel? By debiting Mahesh. Then a new liability bills payable we want to create. Liability if you want to create, you have to credit that liability, no? Therefore, bills payable we are crediting. Being acceptance is given. Next, what happened? On the due date, bank came to us and we honored the bill. When we honored the bill, now this liability bills payable will get cancelled now. So this bills payable we have to cancel. And with us, 5,000 cash balance is there. So this amount we have given to banker for honor of the bill. After giving that, this cash also will get cancelled now. So cash account we have to cancel, bills payable account we have to cancel. Cash account is an asset. If you want to create any asset account, you have to debit. If you want to cancel, you have to credit. That is why cash account we are crediting. Otherwise, you can see other explanation also. That is, cash is an asset, real account. Rule, debit what comes in, credit what goes out. From Pradeep, cash is going. Therefore, credit what goes out is applicable. That is why cash account is created. In that manner also we can analyze this. Then bills payable. How we created? In second entry by crediting. Now this liability we want to cancel. How to cancel? By debiting. Therefore, this is the entry for honor of the bill. Bills payable account add to cash account. When? On the due date, 4th May. Amount 5,000. Narration being bill is honored. So this is the end of present problem. Now take a screenshot of the solution. First, Mahesh journal. Next, Dinesh journal. Finally, Pradeep journal. This is the end of present video. Hope this video is helpful to you. Thank you.